What we've announced is that for families in which the spouse or the child between the age of 18 and 24 is working 20 hours or more in their business each week, or where they've made a capital contribution of 10% or more, they're able to have a very clear example where they do not need to work with Revenue Canada. They can continue to put some of the revenue to the spouse or the children appropriately. For those families that are passing some form of their income to family members, children between 18 and 24, their spouse, when they're not involved in the business, that will no longer continue. And for those that are having family members or spouse working in a smaller way or contributing less capital, they'll work with the Canada Revenue Agency to make sure that their situation is reasonable. We think these are important steps. They're going to allow all small businesses to make investments in our economy. They're part of our goal for making sure that our tax system is fair, that people who contribute to businesses can be appropriately compensated, and that we have a situation where we can make sure that we have benefits for all small businesses across the country.
We have more questions about Bill Morneau's plan to raise taxes on small businesses. He has once again introduced a cobweb of complicated rules and taxes that will keep small businesses scrambling right through the Christmas period and scratching their heads thereafter. Small businesses across the country continue to see this massive gap between what Liberals say about taxes and what they do on taxes. So we will withhold final and full judgment on their proposal until we've had an opportunity to thoroughly review it with the people who will pay for it, the small business owners themselves.